As an Islamic bank, it invests its customers' money in line with Sharia. Usually, the bank uses principles like mudaraba, which is a profit-sharing agreement, or wakala, which is an agency agreement, for offering savings products to invest the customer's money. There's basically very robust process regarding the use of the customer's money, the way the customer money is invested, and in what sort of investments. The customer's money should be only invested in Sharia-compliant investments that are approved by the Sharia compliance officer and the Sharia supervisory committee. Unlike conventional banks, Islamic banks pay profit rather than interest, so that the lending-borrowing relationship doesn't exist in terms of the savings account offered by Islamic banks. Islamic banks instead, they undertake investment activities where there is which involves buying and selling commodities or financing, offering the funding to finance homes. Then the profit generated from, whether the rent generated from the home finance or the profit generated from trading in commodities, will be shared with customers on the savings account in accordance to an agreed profit-sharing ratio. Basically, the customer's money is invested by Islamic banks in different ways, which all of it should be Sharia compliant. For example, Islamic banks are not permitted to invest their customers' deposits in borrowing lending relationship that generate payment or receipt of interest. They are not allowed to use their money for example, the same way that conventional banks use for speculation, short sellings, futures and options, this sort of contracts that would involve payment of interest, uncertainty, and other prohibited transactions in Islam. They will not be able to use it for unbeneficial or socially useless investments. For example, things like gambling places, casinos, and other unethical places or investments. They can't use it to buy, for example, shares in companies that are not considered compliant with Sharia.